Well, first of all, I'd like to thank the organizers for this invitation to participate with such a distinguished panel. Before I start, I'd like to ask a question, a show of hands. How many of you have life insurance? Life insurance for those. And does the value reflect what you believe is the net present value of your future earnings, or is it enough to pay your mortgage? And just keep that in mind, and I'll go through, I'll end my comments on that. First of all, as part of my discussion today, I'll reference the MPC oil and gas study. And I was fortunate to be a participant. Though I'm not a lawyer, I would like to say that, and I say this at this and any other event, all the opinions are my own. I do not speak for the council. I'm sure if Matt's still here, he is a council member, he can speak for the council. I, to the contrary, do not. Having participated in this study, I can attest to the significant discussions on oil supply, and specifically on peak oil. As you know, and I'll go briefly through the study just for your benefit, the study was performed at the request of the Secretary of Energy, and it took almost 18 months to complete. More than 350 people participated actively, and outreach was performed to more than 500 additional people. The Secretary posed 3 questions, and I'll quote here. What does the future hold for global oil and natural gas supply? Can incremental oil and gas supplies be brought online on time and at a reasonable price to meet future demand without jeopardizing economic growth? And what oil and gas supply and/or demand-side strategies does the Council recommend the U.S. pursue to ensure greater economic stability and prosperity? No big, task at all. So one of the things I want to point out, and I wasn't here this morning, so I don't know the criticisms or the compliments paid this morning to the study, but the study titled Facing the Hard Truths About Energy recognizes the accumulating risks the world faces in providing energy needs, especially to fuel economic growth and well-being. I'll point out one of the very interesting results of the study, which is we performed a collection of data from many different sources, public sources. And what's interesting is after 2015, there's a divergence of views. So up till 2015, there's relative consensus that the band of data for future oil supply is relatively within a very narrow band. But after that, things diverge drastically. You have people who expect a linear increase throughout 2030, where we'd have about 118, 120 million barrels per day of demand, and of course supply, because supply always meets demand in these models. And then we have the peak oil type forecast, where we have very low numbers, 83 million, 82 million, even lower values. So we have what I would call a very large divergence of this. The study had the unique opportunity to receive data, and I'll make a clarification, data that was aggregated and blinded for antitrust considerations. So I never saw the original data. I saw the blinded data that was aggregated from a considerable number of companies and consultancies. And to my surprise, the spread that we saw from the public data is equal to the spread we saw from the company data and from the consultancy. So that means that there are companies out there that believe in supply scenarios of 80 million barrels, and there are companies that believe of supply scenarios of 120 million barrels per day. So that tells you that the study was able to, in my perspective, say, well, the public view and, let's say, the corporate view were very similar. And to me, that was a very surprising result. Similarly, we heard today about a peak in gas. That we did not see in the study. In the study, we saw, as a matter of fact, increasing supply of natural gas coming from different regions of the world. Some people thought it was from the Middle East, some people thought it was from Russia, but still, that view of a peak was not, we did not capture that in the study. Nobody provided us that sort of data. So with that introduction, I'll try to answer Bob's questions in the few minutes that I have. Well, as you may suspect, I'm not concerned about world oil peaking. However, I'm seriously concerned about supply not being able to meet demand. especially as what we call business as usual demand forecasts. I think that's a major concern. I'm very concerned about that. And but I mean by that is that it's a world that will not continue as usual, and we will face change. And what that change is not clear to me yet. You've heard today that income levels in China and in the shorter term in India have finally reached levels that oil demand in those countries will rise considerably. Their energy intensity will actually increase, and that's where the new demand has come about. Of course, I could talk about this for hours, but I'll sort of point out that one of the differences that's happening today in the world is that there are countries like the US and the UK where consumers actually see market signals with regard to pricing. So demand for gasoline in the United States and the UK has plateaued. So that's telling us that people are actually starting to react. Even though we all like to drive our cars, we're maybe not driving as much as we would drive otherwise. Other countries like China and India and many other consuming nations, consumers do not see prices. They see subsidized prices, which are paid by trade surpluses and the rest. So they actually consume much more than what they would consume under a market mechanism. The second question was, when might this occur, and do you expect a sharp peak or a plateau? Well, I think the market is working today in many places, as I mentioned, and I think my major concern is, as was mentioned before, a possibility of a recession. A recession or a prolonged recession would actually, we would have a rapid decline in demand and thus a rapid decline in production, but very low prices. And it's not really a peak oil scenario, it's actually a decline into a not so nice world scenario. And that is, I'm concerned on that sense. What informs my views? Well, I wasn't sure I could say this, but having seen the panel, I find it an interesting question given that I am the youngest one on the panel. I am still an optimist, and I think much like Bob's SAAC paper, I think technology will lead the way. But I do believe market mechanisms will help us along the way, will help us moderate demand and create incentives for additional and new investment. I've worked on heavy oil for several decades, and I know that in Venezuela we produce only 4 to 8% of the original oil in place for less than $2 a barrel. I've also seen tests where we can produce more than 60 to 70%. It just doesn't make economic sense to produce injecting steam. We produce primary production. And as such, I think with other economic conditions, we will exploit that resource. To address the final question, which I think is the more important one, in light of the error on peak oil, what national or international actions do you think are appropriate and when? Of course, data, we all agree that's the first thing, but given that I'm a mechanical engineer, and I believe that we live in a world where the laws of thermodynamics apply, again, I'm an optimist. As long as we have international trade, which we've heard in many cases is not something that everybody agrees to. Do you have 1 minute?
Go ahead.
Thank you. I think the world will continue to foster and will have energy to fuel growth. If I look at the third law of thermodynamics, so please forgive me for those who are not completely, we heard about today about energy, what was the term? Not energy intensity, but energy efficiency. The third law of thermodynamics is quite interesting, and what we've done is moved progressively to fuels with higher energy availability, better fuels, more fuels with better energy availability, meaning we can extract more energy from them. And the fuels have had their origin in resources that have also higher energy availability. But we're changing. The world is going to resources that have less energy availability, and we are faced with a new challenge, which is how to provide better fuels from resources that are less attractive. I'll try to finish with a comment on, well, first of all, we have seen a continuous transition from one resource to another and from one fuel to another. Future forecasts, and we saw that in the study, differ in their composition of liquid supply. How much comes from conventional oil, how much comes from unconventional, how much comes from gas to liquids, coal to liquids, biomass to liquids, to name a few. If market mechanisms are present, those sources will increase or decrease as the demand for liquids changes and the relative costs evolve. We face a new challenge given the dimension of the infrastructure that we have to replace or modify. So I think alternatives will be based on solutions that use existing infrastructure. Finally, just for policy considerations, we have an uncertain series of actions to take, and we have, let's say, an expected cost associated with peak oil. How much will it cost us to overcome peak oil? And the issue is, how much are we willing to spend today on an uncertain action in the future? Of course, some believe it already started. And I think that it's an issue, it's very similar to insurance, and that's why I asked at the beginning. How much should we spend today to insure ourselves of the consequences of that? And how do we change that policy or that structure in insurance to spend more or less as we move along? I'll stop there.
Okay. The cleanup man, as we say in baseball, is Jeremy Gilbert, who joined BP in 1964 and worked first as a production engineer and later in reservoir engineering and planning in Libya, the United States, Kuwait, Abu Dhabi, and Iran. Next, he supervised BP's North Sea reservoir engineering and managed all of BP's UK petroleum and reservoir engineering activities. He later became vice president of BP Alaska Exploration before returning to the UK, where he was appointed BP's chief petroleum engineer, responsible for the company's worldwide petroleum engineering performance and associated research and development. I could go on here, but he spent then time in London and Houston and Anchorage. And if you read this bio in detail, and you see that he retired in the year 2001, it had to be because of exhaustion. Jeremy is now managing director of Barrelmore Limited, a company providing technical audit and training support to the oil industry. Jeremy?
Thank you. Let me deal quickly with some of the questions that Bob has asked us to respond to. When will a peak occur? What shape will the peak be? Will there be a plateau afterwards? Why do I think those things? I think a peak will occur soon. I think there'll be a brief plateau afterwards and then an undulating decline. Why do I think that? Because I listen to everybody else who's done these very complicated numerical studies. They've all got totally different answers, and I sort of draw a line down the middle. I believe Bob Hirsch when he tells us that it's going to take 10, 15 years to respond in a logical way to our supply failing to meet demand, and we haven't got that sort of time. So I don't think we will respond in a logical way. I think it'll be a chaotic way, and I think it'll be a very unpleasant way. And that I guess, brings me to the second last question about how concerned I am. And I think I'm very concerned. I think I'm concerned because I'm a sort of, I'm a passionate person, and I feel strongly about reservoirs and how they behave, and trying to convince other people that how reservoirs behave is important. And I feel I have failed totally. I sit on the table this morning, at the table this morning beside Dr. Nehring, and our views are totally different, and I'm sure I convinced him of nothing, and I feel I failed. I really feel that that until the technical people who belong to ASPO can come to a consensus on how oil fields are going to behave, we've got little chance of convincing media, politicians, public, anybody else that we really know what we're doing. And I just don't think we're getting there. I think I understand reservoirs, and I think reservoir engineering is a fascinating subject, but somehow those of us who are reservoir engineers in this organization aren't getting our message across. And until we understand oil fields and oil reservoirs, we don't understand anything else. I think that we are heading in, as mankind, that we're heading into a period of great pain. It's unfortunate that at the time when oil is running short, our population continues to increase, and we seem to be living with 6.5 billion other people whose main desire is to get bigger motor cars or more motor cars and drive them around. I think everything seems to be going wrong at once. So I'm a passionate pessimist. I just think we're in a big mess. And how do we fix it? What are the actions we should be taking? Well, clearly we should be taking actions personally to reduce consumption. I don't think we're going to have much success in convincing our neighbours to do that until we have a better story to tell, and I don't think we have that story yet. But we must do something ourselves. People have been talking today a lot about data, which is great because I've been talking about it for several years. If we had better data, we could tell a better story. With the data we've got, our story is always going to differ from person to person. So if somehow we can persuade our politicians to get the leaders of the OPEC countries to deliver better data which everyone can use, that would be super. I don't see it happening. I don't think there's any single alternative to the gap between the, single solution to the gap between the supply and demand curves. We've heard why nuclear isn't going to work. We've heard why biofuels aren't going to work. We've heard why coal may not work. They've all got to work a little bit. No single one of them is going to work totally, but they're all going to work a little bit, and I think we've got to try and encourage the people who are experts in those technologies to deliver the bits we need. So I'm feeling gloomy after today. I think we've heard a lot of gloomy stories, and I think we're heading into a period where there's going to be a lot of gloom. So enjoy the evening and enjoy the next few days.
Thank you all, and thank you all for staying close to the 8 minutes. I'm going to pose some questions, but we'd like to have questions from the audience also. So if you've got a question, please print so I can read it, and raise your hand, and somebody will come around and pick them up, and we'll sort through them. And I apologize in advance that we probably won't be able to get through with everybody's questions, and that is in no way any reflection on the quality of your question. As I listened to the speakers, it seemed to me that we heard a number of different approaches, a number of different ways of thinking about things. There's certainly the technical, we heard about the philosophical, we heard about the political, we heard about the managerial, we heard about the psychological and the sociological. There is no way in something like another hour that we can possibly work our way through those kind of subjects. And so what I'd like to do is to focus primarily on the technical and managerial aspects of this problem that we're dealing with. We've got the panel here. We've got people who are technologists and people who are not technologists. And so there'll be some questions that some can answer and address, and there'll be some that others are going to be capable of addressing. What I'd like to do is to start with the geology, because the geology ultimately determines everything, and particularly getting back to this question of data. And I'd like to focus on conventional oil. And for those of you who are students of this, right away know that there's a big question: what is conventional oil? Because there are a number of different definitions floating around. Let's assume that that's light oil that comes from anywhere on Earth that we can find it. For those people who have made forecasts and who have looked into the future as far as conventional oil is concerned, we deal with data from a number of different sources. Some of them are good and some of them are highly questionable. So the first question that I'd like to pose to the technical people on the panel is about data quality, and where is the data of highest quality and where is the data highly questionable? Mariano, you want to start off on that one?
Well, first I'll refer to the study, to the MPC study, where we actually looked at endowment data. and tried to collect data from as many sources as we could. And interestingly enough, there are very few original data sets in the world for original oil in place. It was mostly USGS and with certain variants in other places. So for original oil in place, the estimates, all the roads lead back to USGS with its limitations. So that's one thing that we found. And we did get some production data from foreign sources, which are part of the report, but we didn't get sufficient data for that. As for the quality of the data, USGS, we can have a long discussion of how good or where it needs improvement, but that's all the roads led back to USGS.
Richard?
I'll take up that original oil in place data because that's where we begin. And there are some inherent problems in that. We looked at this last November, and even when we think we have a very good understanding of oil in place, we find out there are a lot of problematic aspects. We generally have a fairly good idea of the producing area, plus or minus a few percentage points. But when it comes to things like what is your average porosity and what is your average net thickness, find out that's really based on a lot of assumptions, like what do you use as a porosity cutoff for your effective net thickness? If you have a heterogeneous reservoir, and you almost always do, there's a variation. And essentially, if you're looking at this from log data where you sampled with wells, say if you have one well every square mile, one well every 40 acres, you realize in that 4-inch or 6-inch core sample you have, this is an infinitesimally small sample. And I checked something like 6 statistics books on sampling theory and to try to find out what is the degree of error when you have a sample that's like 1 in 10 million or 1 in 100 million. And I couldn't find any guidance whatsoever on how to even calculate that. But that's what we're dealing with when we do oil in place measurements, and we assume from an infinitesimally small sample that we're looking at this. So there are fundamental physical problems just in determining our most basic beginning category that we use to do this. I mean, I used the figure of 7 trillion barrels original oil in place in my presentation this morning, but that came with an error band I didn't mention of at least plus or minus 1 billion barrels. And I think it could easily be greater than that. And that tells you that's where we're beginning, and it probably gets worse once we start getting into quantities beyond that.
Jeremy?
Well, there are two ways of calculating or estimating, predicting the performance of an oil reservoir. One is do you go through the process of what's called decline curve analysis. If you have some data from the field which describes the production rate and perhaps the pressure performance of the field, this is a very imprecise, physically meaningless way of calculating performance. It's a way which dates from the early 20th century, but which is still widely used in the absence of any better data. The 21st century or late 20th century way of calculating recovery or the production profiles for a field is to go through the process that I tried to describe this morning of using geological data to define oil in place, and then to use reservoir engineering processes to define a recovery factor, and then from the reserves you calculate in that way to estimate production profiles. So where is the best data? If you want to follow the second approach, which is the one which any oil company will do to predict performance for its own fields, then you've got to go to either the oil companies or, well, either the IOCs, the international oil companies, or the national oil companies. They're the only people who have the geological and the engineering data which allows you to take that approach. If you are forced to go to the decline curve analysis approach, then I guess you can trawl through some of the various consultants who are around, the IHSs, the Wood Mackenzie's and so on, and see what sort of data they've got. But their data is patchy and it's not particularly reliable. The answer to the question is that the good data is scattered around among overseas governments and among the oil companies. It's not accessible to people like ourselves who would like to try and analyze it. Where is the most questionable data? It's everywhere. It's the questionable data, sadly, which people like ourselves are forced to use to try and make predictions. And that's why the predictions we make show so many variations and have such uncertainty. If we want to make realistic predictions of how world oil supply is going to look over the next few decades, we cannot do it with the data which we outside the oil industry currently have.
Most important data that in the world is probably in the Middle East. Data is data. He was a reservoir engineer. I spent a lot of time in the upstream part of the business in my life. This is not all exact science. The geology is extraordinarily difficult. It's complicated. And two very good reservoir engineers, geologists, can look at the same data and come to differing conclusions. In the Middle East, there are some countries that we think are extremely good and capable, and there are others that are questionable. Which are the best ones? Which are the ones most likely to believe? And which ones are less likely to believe? And if this is too sensitive a question for anybody, then don't answer it. Mariano?
Fortunately, I do not have an opinion on that. I would like to refer to the point of the data from countries, because I am familiar with the data for our country. For Venezuela, I'm very familiar with the resource endowment and the recovery factors. And just as an example, right now, the reserves that are quoted by Venezuela in the last few months are based on, let's say, a recovery factor, which is a political recovery factor. It's not a technical recovery factor. And they measure the original, or they estimate the original oil in place, and then they say it's 20% that is recoverable. So that tells you that it wouldn't pass the SPE-AAPG reserves definition test as a qualification. And I suspect that we had a discussion in one of the SPE forums in the past few weeks, and this repeats itself in Kazakhstan and Turkmenistan and many other countries. So Middle East I'm not familiar with, but it seems to be reserve numbers are political numbers, not necessarily technical numbers. One thing I didn't mention before is that in the NPC study, we received aggregated resource data from the companies, and we did see numbers which were in, I would say, the same ballpark as USGS. So going back to the data that IOCs have, they shared through this aggregation process some of that data, and we saw data which was very similar to the USGS data.
Richard?
I'll sort of do a shift on that question, because which countries have the best data? 2 weeks ago, I heard a presentation in Banff from the Alberta Energy and Utilities Board, which does a very thorough job of looking at the size of the extra heavy oil bitumen resource in Alberta. And they went through their latest reevaluation of that resource, and the total number was essentially unchanged. Earlier it was 1.7 trillion barrels in place. The new estimate was about 1.7 trillion barrels in place, plus or minus 10 billion barrels, and not a significant change. But they also showed the reevaluations area by area. And in this reevaluation of this fairly well-known resource on which they have thousands of wells and with logs and cores to look at, and they utilize very intensive database in which is at least publicly accessible. They were doing revaluations of certain sub-areas within that, really on the order of at least plus or minus 25%. And this is a very well-studied area with very competent methods. And I get back to your original question about the Middle East. I tend to think that Abu Dhabi and Saudi Arabia have very competent national oil companies, and yet yesterday afternoon we heard many questions about the Saudi numbers, and so there are some fundamental doubts. I agree with especially Matt Simmons' call that we do have much more data and much better data transparency, but we are still going to run into sort of fundamental differences of professional interpretation and judgment in evaluating often the totals that get published, and we will have to operate in a eventual fog looking ahead, even with vastly improved reporting to what we have now.
I was at Exxon a couple of days ago, and they had a fascinating mahogany exhibit where they had little vials of crude oil from about 30 different fields all over the world. They had some Prudhoe oil there, they had some North Sea oil there, and below the vials of oil, which ranged in color from amber to very dark black, there were little cross sections of the rocks out of which this oil had been obtained. I don't think our future is cast in stone here. I think reserves, who cares? You know, at the current rate that we're producing the tar sands, the 160 billion barrels of proved reserves in Canada is going to last 200 years, 2 centuries. The unconventional oil is not going to rescue us. We know that. It's only 600,000 barrels a day in Venezuela. Chavez has driven Venezuela into a ditch. You know, we don't have a lot of data. We'd like to know what Putin's PSA is. Does a guy have prostate cancer or not? We don't know. I think our future now, we're talking about flows, volumes over time. Time is a critical ingredient here. We're dealing with an hourglass. You know, that's the reality now, in my view. I think we have pretty good, the data's crappy on the one hand and it's adequate on the other to make a really persuasive case now, much better than you could make 3 years ago, about what the immediate future holds.
Did you mean to say that our future is not cast in stone?
It's not cast
There's a
in the
joke
reservoir
there.
rocks. I don't...
Come on, folks. Jeremy, your thoughts, please?
About what Randy just said?
No, about the question that I posed, namely, where is the good data, and particularly the
Well, I
Middle East?
answered that. I think the good data is locked up in the companies, and we're not going to get it. So we're going to have to somehow deal with the data we've got. I think Randy's right. I mean, I think if we're talking about the short term, we don't need the sort of reservoir data which is locked up in the companies. We can see just by sticking a straight edge to decline curves, we can see what's going to happen over the next 5-10 years. So in that time frame, we can see whether or not there's a problem. But if we want to look further out than that, we do need good data, which I think was what you were asking about. And some countries, some of the national, I mean, what the US has got in terms of data is irrelevant. The US doesn't have any reserves in world terms. The real reserves are in the Middle East and in Russia. I don't know an awful lot about the Russian industry. There are people in the room who know a lot more than I do, but I do know quite a lot about the national companies in the Middle East. And their technical people are as good as the technical people in the IOCs. What those companies tend to lack is good project managers, but they've got excellent reservoir engineers, they've got excellent geologists. So they're not very good at delivering projects sometimes, but as far as understanding reservoirs is concerned, and developing those reservoirs efficiently, they can do it just as well as anybody else.
One last quick comment. I think in the next 10 years, the Saudis, you guys watch World Series of Poker on television, they're going to take their cards and they're going to flip them over. And they're going to say, all in. This is what we've got. It's going to be in their best interest, in their political interest, and in their economic interest just to show us their hole cards. It'll take a lot of pressure off them. It'll take a lot of political and it may back the military force that we're going to be kind of brandishing in that region. It will be a smart thing for them to do, and I think they're probably already reevaluating. Why don't they give Matt Simmons everything he wants to see? What's the downside to them?
What's the upside?
Well, I think the upside is that the pressure on them to increase production to unreasonable levels, well, I think we're all going to be dealing with reality, and I think the upside is telling the world what the reality is.
I don't think they feel any pressure to do these things. They're quite happy. They know what they want to do. We feel pressure when they do things. I don't think they feel it.
Well, but Jeremy, when oil goes to 120, 140, 150, aren't they going to say, Jesus, you know?
Let me cut in
Iraq.
here
No,
because I wanted to talk just about data, and we're getting into something that, of course, bears on the subject. Let me go to
Would you
Mark
like to go have a
as
fist
a
fight out there while we,
Mark, you came into this business without any kind of petroleum background, I think, and other than looking at a lot of energy, you had to learn a great deal, your team had to learn a great deal. Do you have any particular observations on the data side of this from what it is you did coming in from the outside?
You want me to sit between these two? Yeah, I mean, I think from a technical standpoint, as someone who looks at numbers and does analysis, there are a lot of holes in terms of what we don't know about the data. USGS has told us if they're the resource for original oil in place, they're the best information out there. The last assessment was done in 1995. We're in 2007. They told us there are many areas that they use the term holes we don't know about. The areas they even do know about, just listen to the experts saying, plus 25%, you know. So from an analyst standpoint and looking at the data, we would say the data is not reliable. But I would also add that even if we got good, reliable data and we knew everything that was out there, I think there's still the question of whether you would get some action. I mean, think about climate change. How long did it take, and we're still not there yet, where people think that it's an issue? They have the data. Now, have we moved on it?
Roger, did you want to comment at all?
I'm not an expert on the data in the oil area. Just say a couple of things. I am aware of the fact that as bad as the oil data are, the data for natural gas are infinitely worse. And I don't know if we're approaching a peak in natural gas in the short term, long term. So the next thing we have to worry about, I think, is adequacy of supply and demand related to natural gas. And again, the data there are just much worse than, as bad as the oil data are, the natural gas data are worse and almost to the point of being non-existent or non-believable.
Okay, let's move on to the next question. The question is, why don't current prices reflect future scarcity in the market? And somebody says, who answers this question, and I don't want a story on long-dated futures, but I don't know how you can answer the question without doing that. Roger, you want to start on that question? How good is the futures market? How good is the current market?
Well, I'm not sure that the current prices don't reflect a lot of the futures data, but I think the future markets are important, but of limited guidance here. I think that the reason it is obvious to people who've been here all day. There is so much uncertainty. There are so many conflicting views. The data are so bad, and as Matt Simmons said, you know, we'll recognize the problem when we see it in the rear view mirror. So I think it's a very inadequate situation we're in. Probably a lot worse before it gets any better. And the other thing I might add with respect to peak oil, or as I prefer to call it the demand outstripping supply. Not only will we see higher prices in the future, but I think we're going to see a lot more price volatility in the future.
Anybody else want to talk about the marketplace and the futures market?
I think the market seems to be taking a very, very short-term view of what's going to happen. It doesn't seem as though the market is particularly well informed or interested in what's going to happen more than 2 years or so ahead. So for some reason the market doesn't seem to be an efficient way of currently of understanding what supply is going to look like. It doesn't seem to have responded.
Does anybody else want to address the question?
Well, I'll just comment on the fact that even though markets are not perfect, the market mechanisms do show something. And what we see today is high enough prices for the markets to clear, if we consider speculation and all these other things. So what we see is demand destruction in the poorest nations of the world, where we have scarcity, we don't have oil, we don't have fuels. And the issue is that's taken to a bigger scale. If prices continue to rise, we will have demand moderation through demand destruction or shifts in demand from different regions. So I do think that markets reflect what current thinking is. We do not have a long-term contract, though they'd ask. So I can't buy a contract for delivery for 30 years and bid on it. It just doesn't exist today. And that's why we talk about it. I've talked about insurance. It's just there's no mechanism today to do that.
But Bob, the demand destruction that's happening that matters in the markets is what's happening to the dollar. I mean that's a signal. This thing is worthless now. I mean, it's not all worthless, but it's worth, to the pound. I mean, the pound's over $2 a day.
It's always a question of separation of variables also. What specifically came first, second, and third with respect to the weak dollar? I think that my comment on that would be that it could very well be a contributing factor, but trying to unravel that again is probably something that we'll only do in the rearview mirror. Well, I'd like to turn to technology for a minute, because people talk about breakthroughs in technology. And I was involved in research and development personally in the upstream part of the business, and we looked broadly and tried to do some fundamental thinking from the ground up, as well as trying to improve technologies that we had. People talk about breakthroughs in technology, and I'd like to know what you consider breakthroughs that we've had in the recent couple decades, and what breakthroughs you think might occur in the future. And by the way, define breakthrough and differentiate that from just normal evolutionary development. Richard, you want to talk about that one? Or not? You have a look on your face like
Just like the deer caught in the headlights.
All right, let me try the chief reservoir engineer here.
Technical breakthroughs in the last 2 decades?
Yes.
Directional drilling, coiled tubing drilling, hydraulic fracturing, 4D seismic, reservoir simulation, the integration of engineering, petrophysics, and geology, so teamwork. I think those are the ones that would come to me.
I have a hard time with that personally, because breakthrough to me is a step change in something. And I think a number of things that you're talking about were evolutionary. I mean, we did have 3D seismic way back. It just turned out to be terribly expensive to do anything with it. Indeed, it happened, and it made an enormous difference. So I think that would be considered a breakthrough. But aren't a number of these other things really evolutionary?
I don't think so. I mean, directional drilling, well, I suppose you could call it evolutionary, but it was over a very short period of time. No, I think the other things I mentioned were revolutionary. Large-scale hydraulic fracturing and propping, that was a breakthrough. coiled tubing drilling came from nothing. It was a breakthrough. The integration of the various engineering and geological disciplines was a breakthrough. I mean, 25 years ago, people didn't work in teams, and the move from people working in isolated groups and not talking to each other to actually working in integrated teams made a huge difference to the way in which we develop our fields and produce our fields. So, okay, maybe they happened over a few years. They weren't sort of flashes of light in the middle of the night type breakthroughs, but they definitely were changes, sharp changes in the way in which we plan our fields and develop our fields.
So we might differ a little on semantics there, but let's step ahead. What do you think might be coming down the pike? What sort of things do you see as possible breakthroughs, or call them significant changes in technology that could materially change the business as opposed to just marginally change the business? It's a very tough question, by the way. It's only because he's a friend that I can put him on the spot like that.
I think I mentioned this morning when I spoke, but it was after the clock had gone off, so I was moving quickly. Better understanding and control of the way in which water moves in a reservoir would be a huge help. Being able to control water movement, being able to modify water viscosity, being able to modify rock wettability, all the things which determine how efficient a water flood is. I mean, water flooding a reservoir is the easiest, cheapest, best understood way of improving recovery. If we could improve the water flood process without spending an awful lot of money, that would certainly add significantly to recovery efficiency. And it's something which the industry's been trying to do for decades, but hasn't quite got there. So control of the way water behaves in the reservoir, I think perhaps is the one single thing which I would pick out as being something we need.
Go ahead.
I'll look to the future, not to the past. And to the future, I see two things. One is an habilitating technology, or something that's enabling technology, which would be nanotechnology, where we have nano materials that will help us change the near wellbore rock properties to improve productivity from the well. So that's something that I think would radically change. But secondly, I'm going into combustion. I think that subsurface combustion of reservoirs where you have in situ upgrading, or that will, if achievable, having the refinery in the subsurface in a sense, that would be that revolution. And I do believe they don't happen in one moment. If we use the Faja as an example, you had a confluence of many little different technologies, and you have a resource which was not untapped for more than 60 years, and it became an economically viable resource in less than 5 years. So it's not one thing that makes the revolution, it's the union of many technologies that make the revolution.
Richard, do you have anything that you'd like to add? Okay, very good. That's a hard question. It's hard to say, and as mentioned, a great deal depends on your definition. I think Jeremy makes some very good points, because indeed teams are working much better in the business now than they were in years past, and that does make an incredible difference. And you can ask the question, why didn't they do that before? Why didn't we fly before the Wright brothers? You just simply don't know. But people have gotten much more efficient along the way. Roger, you seem to be negative about the government's role, or did I misunderstand you in terms of working this problem in the future? And Mark, I think you were positive about potential government role. So did I misinterpret you?
No, I don't think you necessarily misinterpreted me. I think, we really face a dilemma here that some government actions are clearly required and clearly beneficial. And looking back in history, we can, I think, segregate those from government actions that that weren't so good or well advised. Government actions in the 70s and 80s that were, I think, well-founded, decontrol, establishment of much better data, the EIA, IEA, burden sharing, development of the Strategic Petroleum Reserve, increased R&D and so forth. Government actions that weren't so well advised, price allocation controls, excess profit taxes, blaming big oil companies for the problems, that sort of thing. The dilemma we face, I think, in the near future as demand exceeds supply is that people will be upset, and in many cases rightly so, and they'll demand that the government, quote, do something. The politicians will be in as much as or more of a panic than the people, and in their desire to do, quote, something, they'll do a lot of things that aren't necessarily wise, such as subsidies for various types of energy, again, the price controls, allocation, recontrol of different transportation sectors, what have you. So I'm pessimistic and like to be cautious in terms of what the government does or may do. On the other hand, there's clearly a very important role for all levels of government, certainly to encourage more efficient use of energy, to encourage the development of alternative sources of energy, R&D, mass transit, smart growth, those sort of things. So it's a fine balance, and hopefully we'll have the level of competence and leadership in the political sector and at all levels of governments in all countries that will be doing the right things. I'm not too confident of that, but again, the dilemma here is that it's very dangerous when the government starts interfering in the marketplace and through bureaucracy, administrative rules, laws, regulations, what have you. On the other hand, massive government intervention will probably be absolutely necessary, and I don't know how you square that circle.
It's your employer.
Well, of course I'm optimistic because I don't like the alternative. Why shouldn't we try to do better? Because obviously in the past, government's response to issues have not been that great, and we have recent history to learn from in the 70s. And to some extent, I think folks have learned from that, to some extent. But there is a danger, as Roger says, especially if there's a focus on the price. We put together a panel at the National Academies as part of our work, and one of the themes that obviously came out over and over again, didn't matter what their perspective on peak oil was let the market work, let the price go up. And if there's pressure brought to bear on price to do something about prices, that's not going to be a good response. There are many things the government can do. We talked about data. You talked about technology from the supply side, and the government pretty much has stopped investing in R&D. I think the oil and gas R&D budget for this year is going to be zeroed out, and we've been asked to look at that issue. And what we're finding is, there really is an issue for the government, or a potential role for the government to step in and finance those technologies that no one else is willing to take a risk on, particularly as it relates to simple issues of having that patent protection for that technology. Why do the investment when others are going to benefit? And there are definite issues there throughout government, not just in oil and gas R&D, but throughout government there. So there are many ways in terms of, we talked about technology for supply. I wanted to mention technology for efficiency. I mean, that's something that the government needs to pay attention to, needs to look at rules. There are many examples of us not getting it right. Biofuels. We just did a report on the infrastructure problems. We have 257,000 flex fuel vehicles in California. One public fueling station, okay? So you got these E85 vehicles running on gasoline. There has to be a consideration, a development of a strategy that looks at the total infrastructure. And to make a change is going to be difficult. And the government's got to provide some leadership. It may not be the federal government providing the leadership. Many states, the city of Austin outside, the Muni from there, they're providing leadership. The danger of that is we have multiple rules, throughout the country with multiple types of policies, that in itself might not be good. But the leadership that Randy talked about, that actually might come from the local and the state level.
Randy, did you want to comment?
There's a lot of good things the government is doing and some really dumb things. So there's a mixture. The Energy Star appliance stuff, I think we'll have a national building code, really strong national or state building codes are coming. A lot of the exciting stuff that the government can do is weighed in on the demand side of this, the efficiency side. If you look back to the 70s, we did a lot of really stupid things. Most of the syn fuel investments were wasted. CAFE worked like a charm. I mean, who said we put OPEC in the penalty box for 15 years? This time around, I'm really intrigued because this is a more difficult problem. Capital, money, capital, time, and energy are all going to be constrained. So you don't have the freedom to do the really dumb things we did in the 70s. But I don't know that our politicians today are any more smarter than they were about energy in the 70s. A lot of the things that one of the things that concerns me is this American thing of can do. Because part of what is going to be necessary is can't do. An ethic around conservation and efficiency. It's got to be a different, much more insightful analysis of our predicament. If the predicament is we just don't have enough energy, we need to go do more, well, then you do coal to liquids. It's 50,000 barrels, $50,000 a barrel per day. Oil shale hasn't worked for a century. A pound of oil shale has one-third the energy that you have in a pound of Captain Crunch. You know, I mean, there's a lot of dangers out there that the government, in its efforts to do something, can really make this problem much worse, much quickly. Breakthroughs, I mean, there's some intriguing things. Could we use some of this new oil drilling technology to do deep geothermal? People have been talking about hot, dry rock for a long time. I think we may have unlocked that with some of the things Jeremy was talking about, new fracking, drilling techniques, that kind of stuff. The modern wind turbine has been developed with government support. A breakthrough in photovoltaics, particularly thin film, would be enormous, a breakthrough in energy storage. So there are some really wise places where we ought to be doing R&D, and hopefully we do a better job at picking winners and losers this time around than we did in the 70s.
Anybody else want to comment?
Well, I'll finally say something on the breakthrough issue. Tend to view breakthroughs as possibly solving all of our problems, and breakthroughs are almost always have limited applications. Mariano mentioned, for one, this what's called toe heel air injection. It's being tested right now in the tar sands in Alberta, and if it works, it does three things very well. One, you can get a recovery factor in the bitumen of maybe 50% of the in-place volume, which is very good for an in-situ process. You minimize your water use that you would normally have from steam injection, which is becoming an increasingly major problem in Alberta. And you also minimize your external energy use. Most of the energy used in this is you're basically consuming about 10% of the oil in place. You don't have to use natural gas or electricity from nuclear as your source of energy to recover this. So it sounds great on principle, but even if it does work as planned, we're looking in Alberta of maybe 10 to 20% of the oil in place ultimate recovery from this process. We'd be looking at a similar amount in Orinoco in Venezuela. That's basically buying us 10 to 20 extra years at world oil consumption. And that's probably the most, on the oil supply side, that's about the most breakthrough technology I can think of. And that's what it gets us. So it gives us a few extra decades this century, and it would probably take 75 to 100 years for that production to occur, given the amount of wells that have to be drilled and just the amount of labor that goes into this process. So the idea of I don't see it so much as a breakthrough in technology as just strategies that help us buy time and make the adjustments that we need to make on the demand side.
This idea, one of the cultural things and the software things that I've been thinking about is that this idea of global resources is going to need to be buried. We're going to need to dig a big grave and stick this idea that the world is an American piñata, where we can speak cavalierly about Chavez's bitumen coming to North America. I think that that's going to erode over time. I think we can already see this happening now. Sure, we'll have a global energy market for a long time to come, particularly in gas, but this assumption that we Americans have that resources, you can see it in the NPC report, you can see it in the report Mark worked on. We look at all of the world's resources and we describe them as enormous. We know exactly what's happening with North American natural gas. A third of the gas that we use today, I mean a half of the gas we're using today is coming from wells that are less than 3 years old. In the last year, in the last 365 days, we drilled 30,000 new gas wells in the United States simply to keep production flat. But no, globally, we have this enormous gas resource, so we just appropriate it rhetorically to our account. It's a fascinating entitlement syndrome that we Americans are going to have to adjust on the margins at least.
Let's see. We'll go do a few more questions and then we'll wrap things up. The IEA, for quite some time in years past, wouldn't talk about peak oil, and then they started to talk about peak oil, but it was going to be after 2030, and then they started talking about the lack of investment, and they started, some of the managers, executives started talking about 2015, and now they've said this thing, supply-demand crossing at about 2012. How do you react to that, each of you? What do you think? How much is IEA a political body? How much is it getting honest, or how much is it being pushed, or how much is it being nervous? Anybody that would like to talk to that issue?
Well, I'll talk to it because I met with the IEA folks, and I did not hear that. I guess somebody I've heard several people speak to people at IEA talk about oil peaking rather soon. I met with them, and they did not share that same.
They did write it.
I'm sorry?
They did write it.
Well, I haven't read that. It must have been a very recent report. But I don't know how much you understand how these models and these forecasts or these scenarios are made, but there is a very specific point, which is a price is sort of fixed in these forecasts. So if we do have a shortage in supply, what you have is demand destruction through prices. So I'm surprised that they use the term demand and supply cutting into 2012, but I would have thought that they would say that their forecast for business as usual is incorrect, and prices will be much greater, and thus demand will be much smaller, et cetera, et cetera. So and we see that all the time, and when we see the EIA forecast, it has a price scenario. So if we do not believe that, what we will have is a greater price, and thus a different world that we live in, with less demand, less mobility, less transportation, et cetera. So I'm surprised that they use that terminology. I'll have to read that report.
It's the report that came out, 2 months ago, I guess. Anybody else want to comment on IEA? Roger?
I wouldn't believe the IEA model. I would not believe the EIA model. Just a couple of years ago, these models were telling us that oil above 30 or 40 or 50 or $60 a barrel would have all these ramifications and demand destruction. People would stop driving. Certainly the elasticity of people consumption of gasoline driving has to be totally rethought given the experience of the past several years. A lot of the modeling simply looks at a projection of demand of 115, 120, 130 million barrels a day at year 2025, 2030, and that's the demand. Therefore, that the supply must equal demand. Therefore, you're going to need that much supply at some price. All these models are nothing more but glorified regression models fit to past data, I think what we're facing here in the next decade or two is a situation that's probably not necessarily like the past. And predictions of when oil is going to peak or when demand is going to exceed supply. I've seen dozens and dozens of those estimates. I don't know, my guess is probably by 2020, and if anything, a lot sooner than that rather than later. But again, these models, especially when they get to precision, the price of oil will be $73.28, and 20 years from now, it's ludicrous.
I think the basic problem, I won't say anything specific about the IEA, but I think intellectually we all have great problems dealing with major discontinuities. We all tend to think somewhat in terms of looking at past trends and seeing how they work out into the future. When we face a discontinuity in these trends, we're all fumbling around for quite a few years trying to figure out what it means and work our way through this, and to some degree that's where we are right now on the oil supply situation, and it's going to take a few years, I think, to sort these things out, both in terms of independent analysts and in the government and international agencies that do this type of projection.
There's a number of other questions here. A number of very good questions came in from the audience, but we don't have enough time. One of the things that was discussed today is that this is really an issue of flows, and we have had Chris Sobrowski doing these major project studies for a number of years, where he's looking at what has happened and what is happening and what's in the pipeline, and looks out into the future. He can't look out into the indefinite future, but he can look out for a while, and he gets a kind of gloomy picture. Cambridge Energy Research Associates claims that they do the same kind of thing, that they look at projects and a variety of things, and they're much more peaceful for the longer term future. It'd be awfully nice if in some way we could reconcile all of that, but I think that's a very big question and maybe a subject for another time. The two last questions that I'd like to pose to the panel are the following, and we can do this in any order. Number one is the question of risk. What's the risk to the world, to the United States and to the world, of getting this wrong, in your opinion? That's the first question. And I'll go around to all the panel members. And then the last question is the following. We have different views on this panel. How do we get people from the two sides that in the past maybe have been lobbing things over the transom, and that's a really old phrase, lobbing things over the transom to each other? How do we get people to get together and have dialogue and possibly come together in a better, more constructive way in order to benefit us all? So those are the two questions, very simple questions, of course. Risk of error. Let's start with Mark. Do you want to talk about how you feel, independent of GAO, or how GAO feels, whatever you please?
As far as risks to us, risks to the world, obviously there is great risk, particularly for us, being so dependent on oil for transportation. But I'd like to think about it as opportunity. There is an opportunity for us, and I'm less concerned about when. I know I'm going to die. I just want to be prepared. I don't know if it's going to, I'm going to die in a plane going 700 miles an hour or 300 miles an hour, but I want to make sure I have insurance. And I think that what is the danger in preparing, and what is the danger in thinking about this as an opportunity? Why couldn't the development of alternatives be an opportunity? Why couldn't it be an economic boon, as opposed to focus on risk and what's going to happen and the chaos? We need to think about this seriously, take it seriously, and have a motivation. And I don't know what that motivation is going to be. It may be, as Mr. Whipple says, shortages. I think prices can keep going up, and I think he's right. I think you have to pry people's hands off the steering wheel. Why can't we look at it as an opportunity and an economic benefit if we can develop these technologies?
Bob, you wrote the most beautiful thing on risk, and I think after the GAO and NPC reports came out, Steve and I were somewhat critical, although maybe in hindsight unfairly so, and I found myself thinking that I wanted them to say what you had already said so lucidly and beautifully in the report that you and Roger worked on 3-4 years ago. And you know, just the notional diagrams, the very simple diagrams you were showing. I think one person has the independence and the ability, or a small team of people have the ability to speak truth to power in a way that's much more difficult for the GAO or the NPC to do. So I would like to thank you for that report, because I think 50 years from now when people say, well, why didn't somebody warn them? A smart historian will say, yeah, they were warned. It was the Hirsch report.
Well, I'd like to think that we won't get it wrong, and I'm sure it's good to think positively and try and see opportunities, but that doesn't mean that isn't really the answer to the question, I guess. What is the risk to us in the world of getting it wrong? I think the countries which are going to feel, or could feel pain the most if we and they get it wrong, are probably the poorest countries, first of all, and perhaps then the richest ones. I mean, I think the US, as a huge consumer, if it gets its response wrong, is going to feel a lot of pain. I think the countries which have hydrocarbon resources will keep those for themselves. So I think if the US gets its response wrong, there's a risk to all of us that that response would be for the US to use its strength, its forces in some way to take from the countries which are producing supplies which they don't want to release. So I think there's a real risk of civil disturbance and unfortunate use of military power if we get it wrong. But we don't have to get it wrong. I mean, I think we don't have to be pessimistic about it, but we should be aware that there is a huge risk there. How do we get dialogue going with between the two sides?
Let me come back.
You want to come back to that one? Okay.
Yeah, okay. Thank you. Risk, Roger?
Yeah, I'd just like to elaborate on what Jeremy said. There are enormous risks here, and it's not necessarily to the U.S. or Europe or Japan or the OECD. We will have problems, troubles, inconveniences. People will not be able to perhaps fill up their vehicles as much at the prices they desire, and lifestyle change will have to be made, and so on and so forth. But relatively speaking, we'll muddle through somehow. It's the poor nations in Africa, Asia, and Latin America that don't have large hydrocarbon resources that'll really get screwed. Their economies will go down the toilet, without a doubt. We saw that in the 70s and 80s, where in a few years, all the gains they had made since World War II in terms of economic development were wiped out. We're seeing it happen already in these countries, and when the crunch comes, we're talking about very serious economic, political, and social disturbances, perhaps mass starvation, perhaps most likely military implications of this, and those are the countries and the people, and we're talking billions of people here that we really should be concerned with. Unfortunately, again, most of the concern is how we react in this country, the industrialized world reacts, or China versus us versus Japan or whatever. China, India will be wealthy enough to weather the storm. It's many other countries of the world that we really should be concerned about, I think very concerned about.
I guess I have a little problem dealing with this question of risk in terms of what we should do, because the problem is so incredibly complex. And listening to the presentations today, I'm reminded of the old fable about the blind man and the elephant, each of them feeling a part of the elephant and trying to describe it. I felt that's a lot of what we were doing. We know our part of the elephant fairly well. We do not know the other parts of the elephant, and trying to put all these pieces together, even if we would regain our sight, we're too close to our part to describe the whole accurately and make, I think, really good strategies to deal with this risk. I mean, I feel we have to start muddling. Basically, it will be a strategy of muddling through and gradually aiming toward this and trying to avoid the really big mistakes, like total inaction or putting our money on some very bad horses, like biofuels, for example, is something we have to do, but it will take a long time to develop a totally effective strategy for dealing with this problem, and I'm thinking in terms of several decades.
As I mentioned before, my concern has to do with let's call them the mass consumption we have in the countries with surpluses versus the lack of consumption of energy resources in the poorer countries. And looking at it from that perspective, that's the demand that will be destroyed first. So I approach this not from a supply perspective, but mostly from a demand perspective. I hope that the world is able to reduce its consumption. Unfortunately, that implies a change in our past, our change in our trend. We have a trend of greater mobility, of taking airplanes, of riding our cars, and that, in that sense, my view of the future is we will have less mobility, and that lower mobility will be the great equalizer, and that's what's going to change the future demand for the countries that today have great mobility, and that will hopefully save the poorer nations from the problems that they will undoubtedly face.
Okay, last question. What do we do to promote better dialogue? We got folks from different points of view here together today. It seems to me that we need to break down a number of the barriers, and the question is, what one or two things would you recommend that the powers that be in ASPO and NPC and API and anybody else that you want to bring into this, what would you suggest as a couple of things that ought to be considered for promoting very useful dialogue? Jeremy, why don't you, since you started before?
Yes, sorry. Well, I think the one thing that perhaps ASPO and people who believe in the peak oil message have got wrong, or did get wrong in the early part of this decade, was the way in which we were rather scathing of those who didn't agree with us. And who was scathing first, I don't know, and I don't think really matters, but the two sides have been rude about each other, cynical about each other's opinions, and there's been very little technical dialogue. There's just been abuse between the two sides, as far as I've seen, certainly over the last 7 or 8 years. And certainly I've been at meetings where I've presented the peak oil case, and I've been greeted with derision and rudeness from the other side, and I've seen exactly the same thing happen the other way. So I think if we're going to have dialogue, we need to have respect. So I think we need to start showing respect for the seers of this world. We may not agree with what they've done, but until we can at least be polite about it and ask questions in a constructive way, we're not going to do anything. So that would be my suggestion as to how we start that dialogue.
Randy?
Two quick things. Tom Whipple's daily newsletter or the weekly one, I mean, sign people up for that. That thing ought to be read by 100,000 people a day, 1 million people a day eventually within a decade. I mean, it's such a beautiful thing. It's not an opinion piece. It's just laying out the story. It's just the daily scenes of the story. Every day now we're losing 10,000 barrels to depletion. It's just laying that out as it plays out all over the world. It's a beautiful piece of work. So help us sign people up for that. I think that we ought to try to widely distribute that. You know, thinking back on the last 10 years, I think what really drove the oil industry crazy, the energy experts crazy, is when we amateurs said, look, there's a finite amount of oil. We know what that amount is. Half's gone. We're peaking. Forget about it. I think our certitude, Steve Andrews wrote a good column about certitude. You know, we need to be, actually I haven't been a living example of this up here tonight, but we need to be a lot less smug and arrogant in our own views and willing to learn from people like Jeremy and Richard Nehring about how this business really works. And the final thing that I'm firmly convinced about is that we need more than anything in this country an energy ethic. We've had a land ethic for 150 years in the United States. We need to develop an energy ethic. We need to recognize that this stuff is absolutely miraculous. This is the most wonderful stuff, and we're just raging through it heedlessly. So those are sort of my feelings.
Very quickly, I think I would look for the common ground. And the common ground I see in this debate is there is going to be a peak. The difference is when. And I think I would like to see the dialogue move away from, or I would suggest the dialogue move away from the when, because that seems, given all the uncertainties, seems to lead to the kind of dialogue that Jeremy was referring to. I've been involved in one of these email chains back and forth, and it's just pretty unbelievable. I mean, I thought these professionals maybe were in high school. I mean, it was not pleasant. Let's get away from the when and maybe focus about, recognize the fact that we're vulnerable, that is a risk, and that there are opportunities to diversify. And let's maybe, what are those opportunities to diversify to prepare for the peak, whether it's tomorrow or we've already had it, or it's 20 years from now?
Mariano?
Well, though I disagree with not worrying about, I do disagree with worrying about when, because when is the issue. The time value of money is what will determine how much effort we spend today or tomorrow. I've been witness to some of those discussions, and I consider it more an issue of ego than anything else. And I see today that we have shown we're more concerned about the dialogue and less about the ego. And I think that has been great progress in this dialogue. I would concentrate, first of all, understanding the other person's position, but secondly, the action. I don't know how many of you have looked at the recommendations of the NPC study, but I am sure that if you look at the list of things that is outside in the banner that the ASPO is proposing, they're all in the NPC study. The NPC study says we have to moderate demand, we have to open up new resources, we have to do all these things, so the actions speak louder than whatever words we may say. So if we concentrate on what needs to be done, then we'll figure out, you know, was the peak in 2005 during Thanksgiving or not. But the issue is action is what's necessary. And I think we have greater agreement on action than on, 3 trillion barrels or 2 trillion barrels.
Richard?
If I would recommend anything on promoting dialogue, it's don't get locked into being tied to a single value, whether it's promoting national energy security, whether it's reducing our emissions of greenhouse gases, whether it's dealing with the problem of peak oil. With the energy problem, we are really dealing with a host of multiple values, and we have to keep all those values in mind. We can't dismiss any of them, and we can't emphasize one to the exclusion of the others, or we end up with a lot of very bad answers.
Roger?
Well, with respect to a dialogue, I think it's vastly premature. I think the problem we have is getting the issue on the radar screen. It's already been remarked earlier today that media coverage is abysmal. The awareness in Congress and the administration is virtually, with a few exceptions, virtually nil awareness of the peak oil issue or the peak oil controversy. And until we get it very high up on the radar screen, and until people are aware of a problem, we can't begin a discussion, you know, and kind of a dialogue on it. So I think the major problem we face is to how do we make people aware that there is a problem before it's too late. All right, climate change now is on everyone's mind and everyone's radar screen, if you wish, but it's taken 20 years for that to happen. For better or for worse, whatever you think about the urgency of climate change, we started worrying about peak oil several years ago. Does that mean it's going to take us another 16 or 17 years to get it to the level of awareness where climate change is today? Maybe. Unfortunately, I don't think we have 16 or 17 years to wait. So if anybody in this audience or anywhere else has any ideas of how we get this publicized and people aware and concerned and on people's radar screens, I'm open for suggestions.
Let me just add one last word in all of this. We're looking at some pretty grim things potentially with peak oil, maximum oil production. But there's always opportunities in situations like that. The Chinese say yin and yang, I guess. There are opportunities for all of us as individuals. One of the first things I think that we ought to think about as individuals is to protect ourselves, to protect our families and our own financial well-being, because indeed strange and extreme things could happen in all of this. So first thing to think about as individuals is how to protect yourself, how to decrease your vulnerabilities to the shocks or some of the reactions that may occur, which we can't really predict. The other thing is that there are opportunities in all of this, and the question is, from an investment standpoint and from a personal standpoint, think about what it is that you can do to contribute in all of this, to find opportunities for you as an individual and you as part of the community to help to make things happen. It's really up to all of us to, number one, take care of ourselves and then do the best we can to take care of the community. I appreciate a large number of you staying this late at night. It's been a very long day. I want to thank the panel very much. Outstanding group of people with some excellent comments for us.